for a third day. The big rollout. The UK begins handing out vaccines today in what has been labelled the biggest immunisation campaign in history. But stocks and futures slide on a report that Pfizer won't get more doses to the US until at least late June. So, European equity markets set to open up in 20 seconds or so. European equity market futures suggest some movement to the downside at the start of the trading session. There's a lot of concern globally around the coronavirus latest news flow. Of course, the vaccine hope is out there, but in the US, in Germany and in Hong Kong, Matt, we're all talking about further restrictions on daily life, at least in the near term, and that is weighing, it seems, on sentiment. Matt?
Yeah, absolutely. I mean, here in Berlin, for example, we've been in lockdown since the beginning of November. Lockdown light, that is. You can still go shopping at stores, but we can't go to restaurants and bars, the gym or the barber, and that has now been extended till January 10th. So if you're wondering why I'm not in fantastic shape, that's why right now. Take a look at the GMM. The FTSE currently down about 0.5%. Takes a little bit longer for the continental indexes to open up. They should also show gray or red colors there. You can see the CAC Quarante now open down 0.33%. The IBEX and the DAX both down less than 0.25%, but down nonetheless. So we see drops across continental indexes on concern about, well, you've got the coronavirus issues, record cases, infections rising in the U.S., and there are problems, you know, in many other Western and Asian economies as well, even. I mean, Japan now preparing a big package, 73 trillion yen. So a massive number. That's got to be 800 billion dollars. So there are problems with infections as well as some relief packages being prepared around the world right now. The specific problem that we have been talking about, focused on here today and over the last few years, 4 to be exact, Prime Minister Boris Johnson is heading to Brussels for urgent talks with European Commission President Ursula von der Leyen. That's as fears grow on both sides that trade talks will fail. The two concluded on the phone this week that a deal remains far off. The same 3 main issues remain: fish, governance, and a level playing field. Joining us now is Bloomberg's UK government and Brexit reporter Joe Mays. Joe, so Boris Johnson heading to Brussels, I guess maybe not today, but tomorrow. Does that make a deal more likely?
It's very difficult to read what this meeting means, because on one hand you could argue, why would Johnson go to Brussels if he doesn't think a deal is in the offing, whereas others are saying, no, this isn't a stage-managed thing, there's a genuine dispute here, and they just need to have that face-to-face meeting to kind of sort it all out, and we could see him come back in a big blaze of saying, no, we're going for no deal. So it's really hard to read the tea leaves on this one. But we do know that we are at the stage where political intervention is required, the technical talks between negotiators have hit a roadblock, and we're now at that kind of, this really is the endgame moment where Johnson and von der Leyen have to decide, will they make the compromises needed to get to a deal?
Joe, good morning. Is this something that's going to pit Brexiteer against Brexiteer in terms of the amount of access to the European market they are all willing to give up in order to go their own way, to plot a path that doesn't remain hitched to European rules? This goes right to the heart of what many in the Brexit side thought that Brexit was all about, doesn't it? And so, I mean, whatever deal Boris Johnson manages to strike, he's mindful that there will be different views on that back at home.
Oh, very much so. It was striking in the debate in Parliament yesterday on Brexit how many Conservative backbenchers stood up and took a very strong line on sovereignty and urging Johnson to basically give nothing away and make sure Britain has all those freedoms which are promised in the Brexit campaign. As you say, that position isn't really consistent with getting a deal, because a key EU ask is that the UK does commit to some restrictions so it doesn't become a complete deregulated competitor on its doorstep. Otherwise, they'd have to impose tariffs. So it's a really difficult tightrope Johnson has to walk here. If he does do a deal, he has to be able to sell it to those Conservative backbenchers and say, look, I am still respecting our sovereignty, even if he has signed up to some restrictions with the EU. That's also difficult here.
Joe, thanks very much. Joe Mays there covering Brexit for us as we await Boris Johnson's trip to Brussels. We will continue to keep on top of all of this for you. Let's get to European markets right now. We're looking at red arrows, a little stronger in the UK than they are across the continent. Maybe that's Brexit related. And take a look at the pound. The currency is weakening against all of its major peers as the cable overnight volatility jumps to the highest level since March. Joining us now is Freddie Late, Latitude Investment Management CIO and founder. And Freddie, of course, you're invested very internationally, and probably your portfolio is pretty Brexit resistant. But what do you think about, the moves in the pound that we saw yesterday were hitting the dollar and commodities and everything else?
Yeah, the moves in the pound have been very meaningful. It's been a huge move up over the last couple of sort of weeks or a month or so. But a lot of that is also dollar
CIO
weakness.
And founder, and Freddie, of course, you're invested very internationally, and probably your portfolio is pretty Brexit resistant. But what do you think about
the effect of that dollar weakness?
The moves in the pound that we saw yesterday were hitting the dollar and commodities and everything else?
We could see a much stronger
the moves in the pound have been very meaningful.
And obviously,
it's been a huge move up over the last couple of weeks or months.
Sterling's likely to trend higher.
A lot of that is also dollar weakness.
And at the same time, with that dollar continues to go lower, I would expect
and probably the portfolio is pretty Brexit resistant. But what do you think about
and that will sort of change the setup within the market a fair bit, and probably leads to a little bit more inflation expectations, a little bit more value in cyclical stocks outperformance, that sort of thing.
Yeah, what is the range of movement? Good morning, Freddie. What is the range of movement that you'd expect to see on the pound then, depending on which of the paths forward presents itself over the next days?
Well, it's quite hard to tell, because I feel like currency traders and anyone investing in the pound at the moment is quite punch drunk after 4 years of trying to second guess it and deal with the fair value. But for me, with the twin concept that the dollar feels like it's structurally going lower, and the fact that there should be a relief rally in the pound of some sort, points to a 140 handle on sterling at least. So probably another 5-6% upside, and probably something symmetric to the downside, a 5-6% fall if we get no deal, or a deal that's seen as highly unpalatable. But frankly, at this stage, I think any concessions on the three remaining topics would probably be seen as good statesmanship, as opposed to a huge, a weak deal. Any deal at this point on those bases would be good. So it's good for sterling. So I expect it to rally, and I expect us to get a deal.
I wonder, on the European side, in terms of European stocks, in terms of the European economy, how big a hit would a hard Brexit be? How much different is a deal than no deal for Europe?
Yeah, I personally don't think that a no-deal Brexit will be a huge deal for either the UK or for Europe, especially not compared to what we've done this year. And now that we know that there's going to be huge levels of fiscal and monetary stimulus to support the economies next year, I think that Brexit will get lost in the wash. I really do. And, if you think about tariffs going up or a little bit more friction on trade, of course, that would be disruptive. But if that ends up displacing or replacing international flows with local trade instead, you'd end up with similar levels of consumption. And the key thing to look at in both the UK and Europe and America is the household savings rate is still very high. And the possibility of a decent cyclical recovery next year is still strong. This is the first recession in 100 years where household saving has actually risen during the recession, which gives you a lot of hope for consumption growing on the other side.
Okay, and we'll certainly get to some of the stocks you're invested in and how they are set to benefit them, Freddie, in our next conversation. Just a bit more on the Brexit narrative, though, and of course the details of any deal that is signed, I'm sure, will matter to any business that is caught up in the businesses being discussed in a Brexit trade agreement, post-Brexit agreement. But as an investor, how much does the detail matter to you then of what the deal looks like? How much freedom to set your own rules is given up in order to access the European market? Is that a trade-off that will matter to investors, do you think?
I think it will, but I think the one that matters most is the first order consequence. It's that access to the single market. If we have tariff-free, a free trade agreement with Europe, that will be seen as the bullish case. Whether we have a little bit less fishing, whether we have slightly less sovereignty, I don't think from a market perspective would matter anywhere near as much as that free trade agreement. In the long term, the second and third order effects of the benefits to the UK will matter, but I don't think people are going to be pricing those in at the moment.
All right, Freddie, we're going to keep you with us for more. Freddie Late Latitude Investment Management, CIO and founder. Always good to talk to him about his portfolio, and we will do that. Coming up, as the UK administers its first dose of the Pfizer-BioNTech vaccine to the public, even William Shakespeare has received a jab. Stocks continue their slide as Pfizer warns the U.S. may not get more shots until next June. More on the markets next. This is Bloomberg.
Welcome back to the European market open. 12 minutes into a trading session that looks like this for European equity markets. Stock 600 here in Europe, fairly flat this morning. The banking sector making some moves to the downside, down around 0.6%. And of course, we're continuing to watch what's going on with the pound. We lost that 134 handle yesterday. We've been lower than this, though, later in yesterday's session. But 133.26 is where we trade down 0.4% this morning for cable. Let's get a Bloomberg Business Flash. Here's Laura Wright.
Thanks, Anna. Uber has sold its self-driving car division to Aurora, taking a stake in the startup. Sources tell Bloomberg the deal values Aurora at $10 billion. Uber is scaling back the ambitious self-driving project, instead focusing on turning a quarterly profit next year. The deal values its unit at $4 billion, just above half of its valuation last year. Airbnb is boosting the price range of its IPO, pushing its potential valuation to as much as $42 billion. Increasing the price usually indicates high demand from investors. Airbnb can still price its shares up to 20% higher without having to reapply with the SEC. Dubai's largest developer is temporarily halting new projects. That's as the property glut and the coronavirus pandemic have shaved nearly a third of house prices in the past 6 years. MR Properties chairman spoke to Bloomberg.
We as a group, we have stopped the supply. We don't build anymore. We're just taking care of our stocks. We've got a lot of buildings designed ready to go, but we'll watch the market. I believe government entities also, they've been very wise on the supply side. So I think that's helping, and I'm positive that it's helping better than I thought.
That's your Bloomberg Business Flash. Matt, Anna.
Laura, thanks very much. Laura right there in London with your Business Flash. Now let's talk investment strategy. Exxon has doubled down on fossil fuels. In the meantime, Europe's oil supermajors have used the 2020 crisis to revamp their business models with a pivot towards renewable energy. BP, for example, pledged to reduce oil and gas production over time. So in a year of record write-downs is now time to get back into, well, big oil or medium-sized oil. Let's get back to Freddie Late, Latitude Investment Management CIO and founder. This is looking like a more and more diverse group, Freddie. What's your take on the fossil fuels producers?
Yeah, so it's a complex one, but I do think that the ones in the European market in particular, so the big integrated oil companies in Europe, and BP, I think, really at the forefront of this, have set out a completely new agenda for the next 10 to 15 years and really are looking to accelerate that change out of hydrocarbons and into renewable energy, convenience, distribution of electric grids for cars and things like that. And I think that's a necessary move, and it's really right to get ahead of that. And I think it does make those stocks investable again for a lot of people, because while it will still take many years, likewise, our economy will take many years to wean itself off hydrocarbons. And to see that happening at a time when the push from investors on an ESG perspective is very high, I think is very positive. On the flip side, the hydrocarbon business itself, I think as we enter next year, it's very likely, given the supply squeezes that we've seen, the resilience of the OPEC agreement, the fact that a lot of shale oil is going to be shut in, and the fact that a lot of these producers are now not going to be developing the fields that we thought they were going to, it seems likely to us that you'll see higher oil prices coming through, especially with a lower dollar, driving higher free cash flow in the existing core business and accelerating that change back to or into renewables, as well as accelerating the cash return. And so we believe that as of next year, BP will start buying back stock, which is a good thing for a mature business to do. And that will increase the earnings per share, increase the speed in which it can make the transition, and drive free cash flow and returns to shareholders. So it feels like a very interesting mix to us, and it's something we're looking at a lot across the energy space.
So, Freddie, so you've made your case for why you want to get exposure then to those businesses. Do you, given what you said there, does your process for selecting where you'll be exposed to the carbon economy, does it include a sort of ESG filter? And is it just around the E, around environment, or is it around other factors as well? Just interested to know how the ESG narrative, which seems to have really gained momentum this year, how it works its way into the companies that you pick.
Yes, it does. It takes a lot of work. I think a lot of people at the moment are using sort of quantitative metrics and scoring and things like that. But no self-respecting fundamental analyst would outsource other parts of their investment decision to a sort of a model. And so it is a lot about integrating that thought and trying to assess how much the companies will strive to meet and how much they may get ahead of the targets set by regulators. And from an environmental standard, you have to assume that those regulations and the moves for electric vehicles are going to be accelerated over the next 5 to 10 years, and only invest in businesses which you truly believe can meet or beat those expectations. And then, of course, you look at governance, which I think investors always have to a large degree, and social impact in general, separating that from environmental is very important across the board. And I think a lot of these oil companies, after years of heavy regulation, whilst, of course, there are still mistakes, they have become much better social citizens. And I think when you see Bernard Looney speaking, and other CEOs, especially the European majors, they have a very different sense of purpose. And I think that's filtering down through the businesses.
How important is it, Freddie, to apply, strong ESG, I guess, grades to the companies in which you invest?
Yeah, so we don't believe in sort of excluding companies just because some index provider has provided us with scores that says they're weak. And likewise, we don't include companies which are often seen as positive. So as an example, we've done a lot of work on the social impact of social media sites and certain other tech businesses, and won't include those in the portfolio because we believe the harm that's done to society is very, very great. And yet they still tend to score very highly on those quantitative metrics. So We don't follow them religiously at all. We look at them, but I think it's much more about doing qualitative assessments, just like we do for all the other pieces of our analysis. I think surrogating that down to a set of numbers and quantifiable things misses the point in a large way.
Yeah, you like Alphabet then. So what is it about the big tech names, Freddie? What's the factor that makes you steer clear or go ahead?
If you look, it's really the social media sites. So with tech, obviously, the tech revolution is still mid-train, I think, in terms of people changing the way they behave, companies reinvesting back in technology. And something like Google is really, or Alphabet, is really an enabling business. You don't dwell on the Google sites very much. You go to Maps, you go to search, you go to Gmail, you get what you want and you leave. They're very good at advertising correctly and being a source of acquisition for underlying advertisers, but they're not wasting your time. They're not changing your mind. Whereas a lot of social media sites are really designed to drive attention, drive eyeballs, to suck out productivity from individuals. There's lots of issues with mental health, and there's lots of issues with things like vote rigging and false fake news. And I just think that the social impact is being discussed hugely, and yet not by investors.
Freddie, thank you very much. Freddie Late from Latitude Investment Management, the CIO and founder of Latitude. Thank you very much for coming to talk to us. Really good to speak to you. Freddie will be continuing his conversation with us on Bloomberg Radio at 9 a.m. UK time. That is where Matt and I will head in 40 minutes. Matt.
All right, so we know that a 90-year-old woman from, was she from Northern Ireland? A Northern Irish woman in Coventry was the first. Yeah, I guess I could be from Ireland too, but I'm from Ohio. Anyway, in Coventry, the first person in the world to receive the Pfizer-BioNTech vaccine outside of of course, hundreds of thousands who have gotten it in trials. Up next, we're going to discuss the latest vaccine developments. This is Bloomberg.
Welcome back to the European Market Open, 8:23 here in London, 9:23 in Paris or Berlin. This is the picture for you across European equity markets right now. Fairly mixed picture. The FTSE 100 underperforms today. Slightly better performance on the XETRA DAX in Germany. Now, the UK begins vaccination for COVID-19 today. Care home staff and hospital patients aged over 80 will be the first to be immunised with Pfizer and BioNTech's shot. Enough doses to vaccinate 400,000 people have been delivered so far. That's it. That's the UK story. We've been bringing you images of the first patient, patient A, to be vaccinated. Let's bring in Sam Fazeli, Bloomberg Intelligence Senior Pharmaceuticals Analyst and Director of Research for EMEA. And Sam, we were having an important conversation earlier, which I know you wanted to come back to, which is around the level of herd immunity, population immunity you need to achieve in order to enable us to return to life as normal. I mean, you need to define normal, I suppose. But give us your thoughts on that.
Yeah, so I did want to go back to that, Anna, and thank you for bringing it back up again, because obviously the deaths occur often in the very elderly, but severe illness and then with the complications and hospitalizations are much higher in people as they go past the age of 55. When you look at that number, that's 20 million people in the UK. So that's why I think we have to be at least very careful with how we manage our lives, masks and social distancing, until we get at least that community, that group vaccinated.
Yeah, I mean, I've been wearing a mask and haven't spoken to anybody in like a month and a half, Sam, and nonetheless, the German infection rate continues to rise. So I think a lot of people are starting to wonder, is it making a difference? We've been locked down here since the beginning of November, and I think the infection rate has tripled.
Yeah, I don't know what's going on in Germany. I can't speak to that, but I can see here in France that the latest lockdown really made a difference. If you look at the curves of infection rates, it just really kind of cut it by a quarter or more in the past month and a half. So they do work if they are done properly and if people listen to them. All right.
Sam Fazeli there talking to us again a little bit about vaccines and the rising infection rate. Sam is Bloomberg Intelligence's Senior Pharmaceuticals Analyst and Director of Research for EMEA, and we're going to continue talking to him about these vaccines as they are rolled out. As Anna just said, we saw the first patient in the UK outside of trials get vaccinated, and apparently they continue on now. 66,999,999 people to go. Coming up, UK Prime Minister Boris Johnson is heading to Brussels to meet with European Commission President Ursula von der Leyen as key issues remain on both sides. Brexit has not been solved. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. 30 minutes into the session right now, and you're seeing the stocks Europe 600 climb back into positive territory. As the FTSE falls, the rest of Europe is doing marginally better. Let's get the Bloomberg First Word news. For that, we go to Laura Wright. Laura?
Thanks, Matt. The UK has launched what it's calling the biggest immunisation campaign in its history. COVID vaccinations have started across the country, with frontline staff and people over 80 at the front of the queue. Tens of thousands are expected to get the vaccine from Pfizer and BioNTech in the coming days. The UK is the first Western nation to begin vaccinations. Republicans and Democrats are struggling to reach a deal on a new spending package. They now plan to postpone a Friday night deadline for the bill, avoiding a government shutdown. The deadlock is not only over pandemic aid, but also the general budget to fund the government into next year. Japan's new prime minister has unveiled a stimulus package worth over $700 billion. Yoshihide Suga says the plan includes support for medical facilities and homes for the elderly, as well as employment and corporate cash flow. Japan's economy surged in the third quarter, but a rise in infections in recent weeks is likely to cool consumer spending. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna, Matt.
Laura, thank you very much. Laura Wright in London. Now, the Prime Minister Boris Johnson will head to Brussels this week for urgent talks with European Commission President Ursula von der Leyen. That's as fears grow on both sides that the trade talks could fail. The two concluded on the phone this week that a deal remains far off. The same three main issues remain: fish, governance and a level playing field. Joining us now to talk about what is at stake here, Adam Marshall, British Chambers of Commerce Director General. Adam, good to speak to you. So the date is now the 8th of December. Really not very many days until we reach the end of the transition period, and we still don't know if there will be a deal or not. If there were to be no deal, Adam, paint us a picture, if you could, of January the 1st, or maybe it's January the 4th when that reality bites, of how different or how much chaos there would be for UK business as a result.
Well, I mean, the business priority right now, Anna, is clear and precise information. We've been saying that for 4 years now. We've been saying it through the negotiations. And whether they end in a deal or in a no-deal scenario, we still need that clarity and that precision. That's on UK government. A lot of the information that businesses need in order to trade across borders simply isn't there yet. And of course, there are also a lot of systems that have to come online too, that the UK government is still working to bring in. So trade in goods across borders, people attempting to execute contracts in the services industry or figure out where they pay VAT, questions about what happens with data that you hold in one country and need to send to another. All of these things are up in the air for the 1st of January. And that's why so many businesses would prefer a deal even at this late stage.
So the fact that the businesses don't have the information they need to prepare then, Adam, is that because the decisions have not been made, or is it because the decisions have not been made public, or is there just not the detail behind previously made decisions to enable businesses to prepare?
Really, it's a mixture of all three of those things. We recognize that a few of the things that businesses are looking for are caught up in the negotiations. Of course, businesses are frustrated that we're still in that negotiations phase, so close to the end of transition. But many of the issues where businesses require precision are things where the UK government has the power in its own hands to give them that information, and it has not done so yet. And we have gone through a list of 35 core business areas at the Chambers of Commerce, and in those 24 of them, we still have incomplete information. That is a recipe for difficulty in doing businesses across borders. So there is a big burden here on the government of the United Kingdom to provide clarity, to provide that sharpness on the nuts and bolts of doing business around the world.
You may not get that. I wonder, Adam, if what businesses have done to make sure they have enough raw materials to produce the things manufactured in the UK. Have they stockpiled that? And what about purchasers outside of the UK? I mean, if you want something from Great Britain and you're sitting in Europe, I guess you better buy it now, even if you don't plan on needing it until next year, right?
We are seeing some evidence of stockpiling or people taking advanced decisions. But you also have to remember that a lot of businesses have seen enormous hits to their cash position during the COVID pandemic. And many of those that would be stockpiling right now in the advance of a change in trade aren't really able to do so at this moment in time because they're focused on surviving, having taken such a big cash hit. So it's a mixed picture out there. Many businesses that are in really integrated continental supply chains, like in the automotive or aerospace industry, they've certainly done their very best to prepare, but there's only so far you can go. And eventually those supply chains that cross borders are going to have to work. Otherwise, production could grind to a halt.
Just quickly switching from Brexit to the virus, because you mentioned survival, Adam, I wonder, the businesses you represent, are they getting the help they need to make it through the lockdowns that we're seeing?
I think the biggest thing that they could have to help them is a sense that the UK government is doing everything in its power to help them open and trade successfully. Whilst we've welcomed a lot of the fiscal support and monetary support that's gone into the system over the past year, the simple fact of the matter is there's no substitute for an open and functioning economy. No amount of fiscal support could ever make up for that. So if we keep having lights on, lights off type lockdowns, which of course cause many businesses to seize up and some to stop trading altogether, that would be the most damaging thing we could see. We now need to see a forward path so that businesses can reopen and can trade successfully.
If Prime Minister Johnson and his team, Adam, back to the Brexit negotiations, are still thinking about how close they can bear to stay to EU rules to guarantee access to EU markets, what would be the priority for business, do you think, Adam, with the clock ticking and not many days to go until the end of the transition?
Well, the priority for business would be for the two sides to reach some form of accommodation and agreement, whether that be on the level playing field question or on the state aid question. We do see so much trade and so much integrated trade between the UK and Europe that it would be a pity for the two sides after 4 years and so much detailed work simply to walk away from the table and say, we're not going to do this. It's now in the hands of the politicians. The negotiators have done what they can, and we need those politicians to make decisive steps forward over the coming days, because businesses have very little time left now to prepare, and they're going to need some easements, I think, into the new year if the two sides reach a deal, so that they can inch their way towards this new relationship rather than have it hit them at 100 miles an hour.
All right, Adam, thanks very much for joining us. Adam Marshall, British Chambers of Commerce Director General. Of course, an incredibly important time for you and the businesses that you represent, so we'll be watching closely. Coming up, DoorDash and Airbnb are ready to start trading. The long-awaited IPOs hit the market this week amid a flurry of year-end deal activity. Details next. This is Bloomberg.
Welcome back to the European market open. 41 minutes into a trading session that looks fairly flat for European equity markets. Concerns around coronavirus sort of weighing on sentiment as we came into the start of the European equity trading session, from the US to Germany to Hong Kong. A lot of focus on the restrictions being put in place, further restrictions being put in place on daily life, certainly in parts of the US. Travel and leisure under pressure, as you might expect, down by 0.7%. The pound once again in focus as we continue to watch Boris Johnson as he makes his way this week to Brussels to further those negotiations on post-Brexit trade. Let's get a Bloomberg Business Flash. Here's Laura Wright.
Thanks, Anna. Goldman Sachs is inching closer to becoming the first Wall Street bank with 100% ownership of its securities joint venture in China. It paves the way for an aggressive expansion in the Asian nation. The move comes as Beijing is opening up its $50 trillion financial market to foreign firms. Uber has sold its self-driving car division to Aurora, taking a stake in the startup. Sources tell Bloomberg the deal values Aurora at $10 billion. Uber is scaling back the ambitious self-driving project, instead focusing on turning a quarterly profit next year. The deal values its unit at $4 billion, just above half of its valuation last year. Water is joining gold and oil among the commodities traded on Wall Street. Farmers and investors alike are now able to hedge against and bet on future water availability in California. The contracts from the CME are the first of their kind in the US. They are highlighting concerns that water may become scarce across more of the world. That's your Bloomberg Business Flash. Matt, Anna.
Laura, thanks very much. Laura right there in London with your Business Flash. Now, it's set to be the busiest year-end on record for U.S. IPOs. DoorDash and Airbnb start trading this week. With a recent bounce back in markets, traders are willing to pay up even more for those newly listed companies. Here with the details is Danny Berger. Danny?
Matt, what we've seen in this market rally really has been the riskier, value-y sort of stocks that outperform. But within those risky stocks, newly public ones have also really beaten the market. So this year so far, recent IPOs in the last year or so have more than doubled their price compared to a 16% rally in the S&P 500. So if you were a company that had wanted to go public and you were putting it off, say, around March and the springtime when markets were more volatile, all of a sudden you have a really ripe environment to not just go public with a market that's moving upwards, but get a better valuation. And this is exactly what we've seen with Airbnb. When we look at the numbers for their valuations, their last funding round, $26 billion is the high end of their valuation they get. Well, when they're going to go public, at first we hear $35 billion was their target. Well, yesterday sources told us that their new target is $42 billion. Really just shows us how this environment, if you are an IPO, you can certainly get more money, get higher prices for when you finally hit the market.
So that's the IPO market, Danny. What about M&A? Thinking about corporate activity more broadly, has the equity rally that we've seen had a big impact on corporate actions?
It's made things actually very difficult for anyone who's trying to acquire a company. Because prices had been more cheap, we see this flurry of announcements of proposed M&A. And so a month before we get that Pfizer announcement, $170 billion worth of companies are announced as targets for mergers and acquisitions. But then we get that announcement and markets take off. That means all of a sudden these offers, they're less expensive than what the company itself is now trading at. And we see a lot of these companies, these targets, are now trading more richly to the proposed deal. Here's a list of a few of them, but about $23 billion worth of companies are now trading more richly than their proposal. One of them, McCarthy & Stone, this is a UK retirement community builder. They said that they need more offer, they need more money from their acquirer, Lone Star Capital, who just recently said they would give them that more money, confirming the deal today. But we're really seeing this across the board. Companies needing to pay up more money to get the company that was originally cheap, but with the stock market rally really has changed the entire calculation, Anna.
Okay, a lot of moving parts then. Danny, thank you very much. Danny Berger with the latest on IPOs and M&A. And sticking with IPOs, JD Health has surged in the largest stock market debut by a healthcare firm in Asia. The Beijing-based company is targeting more than 100 million users by the end of next year. The CEO, Xin Lijuan, says online healthcare is immune to the antitrust clampdown by Chinese authorities. He spoke exclusively to Bloomberg's Tom McKenzie, who started by asking about the decision to list in Hong Kong.
Hong Kong's capital market is mostly similar to that of the mainland. Its understanding of healthcare is also similar, as China's system is very different from foreign ones. And each country's healthcare industry is relevant to their government policies. That's why we think listing in Hong Kong is a good choice.
How are you going to prioritize putting the capital that you've raised through the IPO to use for the business?
First, we will focus on strengthening our core business. For example, our supply chain, which still has room to improve, even though we are the largest retailer in China's healthcare sector. Secondly, we want to connect our online-offline medical services as soon as possible. Third, we want to have some cash reserves. It's good to have cash at any time in case of any difficulty. In addition, we want to improve the ecosystem of our core business, including investments or acquisitions.
How has the pandemic impacted the online healthcare business here in China?
From a long-term perspective, the pandemic has pushed the healthcare industry forward. A lot more Chinese people are now participating in online medical services. China has entered the normalization of epidemic control. But online medical consultation won't decline as the epidemic peak comes to an end, which means consumer behavior has already been profoundly changed.
What is a realistic number? What is a realistic target in terms of user numbers by the end of 2021, for example?
From my perspective, we're very likely to have more than 100 million users.
Well, let's talk about competition then. It is a very competitive space with the likes of Alibaba Health and Ping An Good Doctor. How do you differentiate yourselves from your competitors here?
Compared to the entire Chinese healthcare industry, all the three main players are very small, and we are all trying to change consumer behavior. In light of this, we are business friends on the same mission of encouraging users to use medical services online. We are not necessarily competitors.
How do you think the new antitrust laws that China is working on will impact the country's tech sector longer term?
Each industry has different criteria. Companies leading the industry can be innovation leaders, but can also be the monopolist who curbs innovation. It's possible. Of course, it's necessary to establish standards at government level to define innovation and monopolies, and we welcome any reasonable government regulations. China's healthcare market is over $1.5 trillion, but JD Health, even as the #1 player, is only $1.5 billion. So it's very hard to monopolize the healthcare market.
That was Xin Lijuan, JD Health's CEO, speaking exclusively to Bloomberg's Tom McKenzie. I just wanted to, sticking with healthcare, just want to correct something I said earlier on. I mentioned the vaccination that we have from Sinovac, the Chinese company, and I talked about a 97% efficacy. That's not actually correct. It is not a 97% efficacy. It is a 97% seroconversion, which is the percentage of people who get the vaccine who actually go on to create antibodies. And that is what they found, 97% seroconversion in this trial in Indonesia for the Chinese vaccine from Sinovac. So that doesn't compare necessarily. It's not like for like to compare that 97% with the likes of Pfizer and Moderna, where we have efficacy rates, which is something different. So that's cleared up. We will get back to the market conversation next. What would European stocks need to do to beat those in the US? We'll put that question to the Market Live blog's Heather Burke next. This is Bloomberg.
Welcome back to the European Open. Right now we are 53 minutes into the session. We're looking at equity indexes that are mixed. Well, they're unchanged, I'm going to say, in France and in Frankfurt. The FTSE is down 0.2%. The IBEX down about 0.25%. Not nearly as bad as what we saw earlier on. Joining us to talk a little bit about these markets is Heather Burke, our Bloomberg MLive editor. And I'll kick it off, Heather, with the question of the day. What you're asking, I want to know what you're hearing or what you think. What would European stocks need to do to beat U.S. peers, or need to happen to beat U.S. peers? What are you hearing?
Good morning. The current shift into value sectors, banks, energy that we've seen in November would possibly really give European stocks an upside over U.S. peers. European stocks have often been known as more of a value trade than U.S. There's less tech, again, more banks, energy, insurance, sectors that really trade at deep discounts and have room for upside. So continued vaccine progress, reflation trade really could give this an upside. Basically, the European stocks compare favorably to U.S. value stocks on a PE and PB basis. And also Europe stocks could be poised for better earnings growth and recovery in the U.S. heading into 2021.
So good morning to you, Heather. So that's the US versus Europe storyline. What about how cyclicals are performing right now? Consumer discretionary. I know you've been giving that some thought, and how that links in with the vaccine.
Vaccine progress, again, the risk-on rally going into 2021 really would give an upside to consumer discretionary stocks versus staples. So discretionary, travel, airlines, Carnival, cruise lines is a poster child. These stocks have really rebounded back more than, say, grocery stores like Kroger, and they're poised to rally even further should the reflation and vaccine optimism that we've seen the last few weeks continue into 2021.
All right, Heather, thanks so much for joining us. Heather Burke there from our MLive team. Do check out the blog. Just type MLIV Go on your Bloomberg terminal. Anna?
That is it for the European Market Open. Stay with Bloomberg Television. Surveillance is up next. Live shot of London to leave you with, and they'll be keeping an eye on all things London related with the Brexit conversations continuing. They move this week to Brussels. This is Bloomberg.
Brussels or bust. Boris Johnson travels to discuss a Brexit deal face-to-face when Ursula von der Leyen. The pound continues to sink. The big rollout. The UK vaccinates its first citizens in what it calls the biggest immunization campaign in history. However, stocks and U.S. futures dip on a report that Pfizer won't get more doses to America until at least June. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, a lot going on in the markets, and this is on the back of what we heard, of course, of a possible no deal with Brexit. I have to say, the noise coming, both from Westminster, but also Brussels not going 100% to plan. Certainly not if you were hoping to get a deal. If you look at pound, it's having quite a big impact. We understand that Boris Johnson will either travel today or tomorrow to Brussels. Unclear at the moment, but he is speaking to people on the front line at Guyot St. Thomas's Hospital in Westminster in the centre of London. This is just a couple of hours before we saw the first person over 90 years old receive the vaccine shot. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. The UK has launched what it is calling its biggest immunisation campaign in its history. COVID vaccines have started across the country with frontline staff and people over 80 at the front of the queue. Tens of thousands are expected to get the vaccine from Pfizer and BioNTech in the coming days. The UK is the first Western nation to begin vaccinations. Now, Bloomberg sources say President-elect Joe Biden plans to nominate retired Army General Lord Austin as Defense Secretary. That would make him the first black American to lead the Pentagon. He was previously head of U.S. troops in the Middle East from 2013 to 2016. The choice comes as Biden is under pressure to deliver on his pledge of the most diverse cabinet in U.S. history. EU officials are warning that Hungary and Poland must offer a clear signal they'll lift their veto on the EU's rescue plan or risk losing billions of euros. Without a breakthrough, the bloc will turn to Plan B. That includes pushing ahead with the recovery fund, but excluding the two holdouts. There's no sign that Hungary and Poland will actually give in. And Japan's new prime minister has unveiled a new stimulus package worth over $700 billion. Yoshihide Suga says the plan includes support for medical facilities and homes for the elderly, as well as employment and corporate cash flow. Japan's economy surged back in the third quarter, but a surge in infections in recent weeks is likely to cool consumer spending. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now, the British Prime Minister Boris Johnson is set to head to Brussels for an urgent face-to-face meeting with the European Commission President Ursula von der Leyen. That's amid growing fears that Brexit trade talks will fail. Now, speaking on the phone last night, both concluded that a deal remains far off. Now, for more, let's get straight to Ed Evans, our Brexit editor who joins us. Ed, what are you hearing on the ground? I know you have a number of reporters trying to speak to sources. If we don't get a compromise or close to a deal by tomorrow evening, does it mean that it's a no deal?
Well, let's see what happens between now and then. I think what we've got to at the moment is a sign that the technical negotiations have gone as far as they can, and it's now up to the political leaders to step in and broker a compromise if there is going to be a deal. But also, it's very clear that both sides still think there's a little bit more time on the clock here. They've still got a little bit more time before the end of the year to extract some last-minute concessions from the other side. Now, I think the EU summit begins on Thursday. It's quite clear EU leaders want to get Brexit off the table by then. They've got other matters to deal with, including a huge row about the EU budget and the rest of it, and that they want to get something done by then. Does it mean the deal has to be done by then? It's always very dangerous to sort of point to deadlines in Brexit. They have a habit of being extremely elastic. And the thing to remember is neither side wants to get the blame for walking away from the negotiations.
Ed, is December 31st a real deadline, or is that also elastic? We hear from a number of people in Europe saying, well, they could extend, but there doesn't seem at this point to be any appetite whatsoever from the UK side.
No, and it would take, I think Europe would have to be unanimous and the British would have to agree to do it. The December 31 deadline is fixed, and it's quite clear. The British were very clear yesterday saying that they don't want to go over that deadline. So I think the one thing we can rule out here is any extension to the transition period.
All right, Ed, thanks so much. Ed Evans, our Brexit editor, of course, will speak, I know, a number of times to Ed throughout the day to exactly understand what is happening when and when exactly. Also, the Prime Minister is traveling to Brussels. Now, joining us now is Anna Stupnicka, global macroeconomist at Fidelity International. Anna, always great to speak to you. How do you deal with Brexit right now? How much of an uncertainty, good morning, how much of an uncertainty is it that we could look at a no-deal Brexit and we're less than a month away from that firm deadline of December 31st?
Yeah, I think it's, of course, worrying, but as always, as you just said, it's really dangerous to try to guess the outcome and the deadlines. I do think, though, that there is incentive, a lot of incentive for the British side to reach a deal, because the UK economy is facing this the prospect of serious contractions, or a double-dip recession, Q4, Q1 of next year, with all the restrictions, of course. And at the same time, if you have a no-deal Brexit on top of this, the risks are really significant, significant to the downside, and it's unclear whether the recovery will be possible in this environment. So I do think, and our base case still remains that there will be a deal, but of course it's really hard to predict, and we'll just have to wait and see.
Is it time possibly to buy UK assets? Anna, when you look at some of the things out there, do they look cheap as pound falls?
Yeah, I think for the time being, we remain neutral on UK assets more generally, because it's just so difficult to navigate this political risks. But overall, I think if we manage to pass this obstacle, the UK is actually quite well positioned for a relatively sharp rebound in 21. Of course, the vaccination program has already started, as we heard this morning, but also the UK economy being so services-based was a real loser during the COVID crisis in this year in 2020. And as things reverse and social distancing restrictions hopefully get lifted through the year, that the services-based economy will really benefit. So I think the UK is really well positioned, and I think there will be a time to go into UK assets, particularly given how unloved they have been through the year, or even longer, but it's probably a little bit too early right now.
So there's an interview going on as we speak, and you can see him live on television. This is the Prime Minister Boris Johnson visiting Guy and St Thomas's Hospital in Westminster in the City of London. This is also the hospital where he himself was treated for COVID, 5-6 months ago. Now, the conversation started, of course, on the vaccines, saying we can't afford to relax now in the pandemic, according to the Prime Minister. But right at the end of the interview, he also took a couple of questions on Brexit, and he says there could come a moment where a deal won't be possible. The Prime Minister also saying that, it's something that I guess we need to look at. The Prime Minister Boris Johnson there talking at St. Guy's Hospital. Anna, with headlines like that, and we're just talking about some of the UK assets, are we underestimating the impact it has on European assets as well if we have a no-deal Brexit?
Yeah, of course, I think Europe would face a risk as well of potential economic impact, and there's also transmission via, of course, financial links. But I do think, again, that Europe is well positioned given the monetary support. The ECB is, of course, expected to ease significantly later this week, and the vaccine program, the vaccination program is likely to start also at some point, perhaps early in 21. So I think, especially if a compromise of the EU Recovery Fund is found, again, later this week or perhaps in Q1, I think Europe is much better positioned despite the potential risks from no-deal Brexit.
Anna, thank you so much. Anna Stupinska there from Fidelity International stays with us, and we'll talk, of course, about dollar dynamics. We'll also talk about the emerging markets. Up next on Bloomberg Surveillance, the vaccine rollout begins in the UK. We get all of the details. This is Bloomberg.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, we're just getting some headlines from Boris Johnson, who's giving a television interview just moments ago at St. Guy's Hospital. This is in Westminster, where the Prime Minister himself was treated for COVID back in April, March. Now, the Prime Minister is saying, he basically talked about the vaccine, saying that, you know, it's something that, of course, we need to keep an eye on, and that the vaccine rollout will take weeks, months, and not days. Today, remember, was the first time that someone took the vaccine shot. It was the first vaccine shot in a Western economy. And then the Prime Minister also talking about Brexit. Now, he says that leaving the EU is a big opportunity for the UK. He was just saying this moments ago. There are limits, he says, on how far the government will go in these talks. And at the moment, the trade deal is looking very difficult. Tricky moment in negotiations, I think, is exactly how he quantified it. This is exactly what we've been hearing from both sides, on the EU side or the Commission side, and on the UK side. It seems that we're at the 11th hour. We also understand the Prime Minister will travel to Brussels either today or tomorrow to talk to the Commission President. Now let's get to another of our top stories. As we were saying this morning, 90-year-old Margaret Keenan became the first person in the world to receive the Pfizer-BioNTech vaccine outside of trial conditions in a Western country. Now, hubs in the UK have begun vaccinating over 80s and some health and care staff. Now, still with us, Anna Stupinska from Fidelity International. Anna, this is very encouraging news for, of course, the world economy, if we can get back to normal. The vaccine also has huge questions left. How many people will want to get vaccinated, whether you can still transmit? I know we're not virologists, but again, what does it mean for the economy? Are we expecting it to be a bit quicker than it actually could in practice?
Yeah, I think you're right. It seems that consensus out there is that now with all the vaccines that are getting approved, we will be back to normal very quickly in 21. I do think there are serious risks. One is related to the vaccine, as you said, around the distribution, the uptake, particularly if you look at people's attitudes to vaccines. There is a lot of skepticism, and historically there has been skepticism within developed markets, and in Europe especially. France usually tops this list. In emerging markets, it's not such an issue, and I think uptake is likely to be very high. But there are also issues about production and distribution, and so all this needs to go really right for the global upswing to take place in 21. And I think there are other risks around monetary policy, and particularly potentially markets testing the central bank's credibility. There are risks about fiscal policy. It's becoming more uncertain whether we'll have more fiscal stimulus across DM in particular. And so I do think while vaccine, of course, vaccine is a good news, there are so many risks that we shouldn't be complacent about the outlook.
So, Anna, do you worry that the markets got a bit ahead of themselves? If you point to some of the downward trends, do you worry about inflation picking up? Do you worry about monetary policy mistake? What exactly do you worry about at this juncture for the economy?
Yeah, well, I think at this juncture, perhaps a couple of risks. One is policy related. So the monetary policy side, we do think that once growth picks up and potentially inflation accelerates, now we don't think that we will see a sustainable pickup in inflation to target and above target, but it's possible that in Q2, especially next year, we'll see a pickup on base effects as inflation collapsed during the crisis last spring. It's likely to pick up. And this is going to be a real test of credibility for central bankers who have committed to keeping monetary policy very, very, very easy for a long period of time. And we do think there is very strong commitment for the Fed and for the ECB, especially to keep real rates in the negative territory. But I think markets will be testing that, and potentially we will see some kind of taper tantrums just to test that credibility. I also think, as I said, on the fiscal policy side, this support was, of course, huge and unexpected in 2020, but it's becoming more difficult to see if we will have necessary support to bridge that gap between now and when the vaccine is rolled out and all the social distancing restrictions are lifted. So I think this is a serious risk to economic growth. And also, if we think about geopolitics, I do think that, again, the markets are pricing a very benign outcome, potentially with Biden being quite relaxed about China. But I do think there are risks, and particularly thinking about the prospects for carbon border adjustment tax that the EU might be already doing over the next few months, and the US potentially joining. I think that could be a serious risk to China and other emerging markets.
And I mean, I was going to ask you exactly, if you look at the take on the emerging markets, is 2021 the year of the emerging markets because they'll have debt relief in certain parts of the world thanks to the agreement from China, or does it spell trouble ahead?
Yeah, no, it could be a year for emerging markets, particularly because, as we know, there's so much linked into the global cycle, into global trade. Cyclical sectors, commodity sectors will benefit as growth picks up, and after all the social distancing restrictions are lifted, hopefully in the second half of next year. And those emerging markets that have been particularly vulnerable, they will benefit from this global upswing. However, I do think the elevated debt levels might present risks, if not systematic, but perhaps within certain emerging markets. But also, as I said, I think geopolitics is unlikely to be as benign as is currently expected. So I do think there are risks, even though the prospects and our baseline scenario is actually that emerging markets should overall perform quite well next year.
Thank you so much, Anna Stupnitska, there, global macroeconomist at Fidelity International. Coming up, DoorDash and Airbnb are ready to start trading. The long-awaited IPOs hit the market this week amid a flurry of year-end deal activity. Well, we have the details next. This is Bloomberg. You're watching Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, it's set to be the busiest year-end on record for U.S. IPOs. DoorDash and Airbnb start trading this week. With the recent bounce back in markets, traders are willing to pay up even more for the newly listed companies. Well, here with the details is our Danny Berger. Hi, Danny.
Hi, Fran. Well, when we got this bounce back in markets, we really saw the riskier sort of stocks outperform, and that means value, and it also means companies that have recently listed. So I'm looking at the IPO index in white. This is companies that have gone public in the last year or so, more than doubling in 2021, comparing to a 16% rally for the S&P 500. So if you were a company and you were holding off going public, maybe around the turmoil that was the spring, now looks like a great time to do so because you can get a much more rich valuation. And that's absolutely what we've been seeing. Airbus is a great example of this. When we look into the valuations that Airbus has achieved at its first fundraising round, it got about $26 billion. But looking forward, what Airbus has gotten recently when it's announced to be listed, it's been about $42 billion is the most recent figure. So really, because of this market rally we've seen, they've been able to really command a much higher price for when they're coming to market, Francine.
Danny, what about deal making more broadly? Has the equity rally had a big impact on corporate action?
Well, we've seen really this flurry of takeover attempts from different companies, and that's led to more or less an awkward situation because of the rally. Now, if we look at the month leading up to that Pfizer announcement that really got markets going, about $170 billion worth of companies were announced as takeover targets. But what's happened since when we do get that big rally in equity markets, all of a sudden these companies are trading at much more rich valuations than their initial offer. So some of these companies are going over to the acquirer saying, hey, we need more money in order to accept your deal. And I want to show you a couple of these deals, but in total, $23 billion worth of publicly listed companies are now trading more richly to the offer that was first insisted to them. This bottom one, this is a UK retirement company. They told their acquirer they needed more money, so that deal was recently changed, Francine.
Danny, thank you so much. Our Danny Berger there with some of the deals in the making and the money surrounding it. Now, coming up, breaking the Brexit deadlock, what with time fast running out, Boris Johnson heads to Brussels for make or break talks on a trade deal. We'll be live in the Belgian capital. Unclear exactly when Boris Johnson will go over to Brussels, but this morning he was also at a hospital for the first vaccination. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The UK has launched what it is calling the biggest immunisation campaign in its history. COVID vaccines have started across the country, with frontline staff and people over 80 at the front of the queue. Tens of thousands are expected to get the vaccine from Pfizer and BioNTech in the coming days. The UK is the first Western nation to begin vaccinations. Now, Hong Kong is implementing some of its strictest social distancing measures since the beginning of the pandemic. It is banning in-person dining at restaurants from 6 p.m. and closing gyms and beauty salons. It's amid a surge in coronavirus cases, hitting the highest daily level since August. Chief Executive Carrie Lam says they have no choice but to tighten the restrictions. And over in the US, Republicans and Democrats are struggling to reach a deal on a new spending package. They now plan to postpone a Friday night deadline for the bill, avoiding a government shutdown. The deadlock is not only over pandemic aid, but also the general budget to fund the government into next year. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. I'm looking at my Bloomberg terminal because we're just getting some breaking news out of South Africa. This is GDP, and you can see annualized quarter-on-quarter better than expected, 66.1%. But again, the last quarter was actually so bad that the right number to look at is year-on-year. So you can see year-on-year, actually, it's a minus 6%. So you can see that South Africa exited its technical recession the 3 months through to September, but gross domestic product figures released today hardly present a glowing report, even though it's better than expected. So you can see the economy still shrinking some 6%. It is better than the 7.5% expected, but still a 6% figure lower is still quite a big deal. You can see Rand, and this is more of a dollar story than it is a South African Rand story, is at 15 per dollar. Now, crisis talks will be held in Brussels with the British Prime Minister Boris Johnson making an 11th hour bid to break a deadlock on Brexit trade negotiations. Boris Johnson will meet the European Commission President Ursula von der Leyen to try to find a common ground on the three critical issues: a level playing field, governance, and of course fisheries, of which significant differences still remain. Well, Bloomberg's Maria Tadeo now joins us from Brussels. Hi, Maria, over to you.
That's right, Francine. A high-stakes meeting happening probably tomorrow between the head of the European Commission and the Prime Minister, Boris Johnson. And we're now joined by Philip Lambert, who is a member of the European Parliament. He's also a member of the Brexit Steering Group. And if I get this correctly, sir, you were also present yesterday at a briefing that Michel Barnier gave to you. And I wonder, look, when you look at the date, it's December 8th. How worried should we be that we don't have a deal in place yet?
Well, it's obvious that the positions remain far apart on key issues, and the general atmosphere here is that the no-deal option becomes the most likely. Of course, the Prime Minister will travel to Brussels, but there's some circles that you cannot square. I mean, you cannot have market access without a degree of regulatory alignment towards the market that you want to serve. And therefore, if that is a no-go for the United Kingdom, then it's going to be a no-go for us as well, giving market access. And that's the toughest issue. And bear in mind that the unilateral actions of the British government, that is the government of Boris Johnson himself, who signed the withdrawal agreement not a year ago, and now openly play with the option of not abiding by it, well, this is not exactly a confidence-building measure. In other terms, there's zero trust in whatever promise will be made by the British Prime Minister. We need promises to be backed up by legal text, And that should include indeed what you call the governance, that is the possibility for the European Union to take unilateral action if the British government does not stand by its word. And all this seems to be unacceptable to Boris Johnson. If it is, well, then there will be no deal.
Right, so that's for the content, but just in terms of the time, you know, we're looking at December 8th. We're waiting for a meeting tomorrow. We're waiting for European leaders to give this a final go. You also need to vote this. Do we think we can get this done before the end of the year? Ultimately, this is going to need extra time.
Well, it's, you know, if you wanted to do the things properly, we should have had a legal text at the end of October. We're now almost 6 weeks later. And still no text. It becomes very narrow. I mean, the European Parliament has penciled in an extra plenary on the 28th of December, but we don't have a legal text yet. So, I mean, unless you consider the European Parliament as a rubber stamping body, then, well, we will need time. And indeed, it increasingly looks that if there is a deal, some extra time will be needed to ratify it.
Okay, so let's go back to the extra time. What do you mean by that? Does it mean that you vote this in January?
Yeah, well, yes, indeed, it would be a vote in January. But then again, I mean, this is not the main question. The main question is whether or not there will be a deal. And there, frankly speaking, the more time passes by, the less I believe there will be one. So the
ratification but the timing is also key because, as you know, Right. But the timing, as I say, is key because the Brits do say that they would rather not go for an extension. So that would be crucial here. But I do wonder tomorrow when Boris Johnson, if that meeting happens in Brussels, what can von der Leyen offer the Prime Minister, though? Because this is going to take two to move.
Well, I'm afraid that she cannot offer something to the tune of have your cake and eat it. And that is what the hard Brexiteers want. And that is also what Boris Johnson promised time and over again. And this is not on offer.
Right. And you know, if you were to give this a percentage, given what we know, given that European leaders are still also playing this very hardball, how likely do you think it's for this deal to finally come through?
Well, less than even. So my money is now on having no deal. I know that it was a prime minister who wanted to make a last-ditch attempt, but then again, that was already the scenario on Saturday. So the negotiators were given 48 hours more, and the result after 48 hours is that nothing moved an inch. And you can call that playing hardball. I'm just saying, well, we are protecting the vital interests of the European Union. And as much as the United Kingdom is legitimate when it defends what is considered its vital interest, it has to expect that the European Union will do likewise. So this is not playing hardball, it's just sound and cold negotiation.
Right, and you've made that point very clear for the European Union. It's key protecting the single market. Philip Lambert, we appreciate your time. Thank you so much for joining us on Bloomberg today. Francine?
Barnier calling, so he's had to go and take that. Maria Tadeo, thank you so much in Brussels. Of course, with a nice roundup of what we're seeing in Brexit. Coming up, serving the public during the pandemic, we'll speak to Will Shu, the Chief Executive Officer of Deliveroo, about the unexpected boost to his business and the company's proposed IPO. That's coming up next, and this is Bloomberg.
the vaccine coming out. It's amazing to see this tremendous shot in the arm for the entire nation, but we can't afford to relax now.
The UK Prime Minister there, all masked up, speaking earlier this hour as the vaccine rollout begins. Now, the pandemic has had a devastating impact, of course, on the economy, and for many businesses in the UK, it's been make or break. Now, 2 lockdowns this year have forced restaurants to improvise and takeaway quickly replace table service. That saw an increase in demand for food deliveries, resulting in an unexpected boost for Deliveroo, who also now, of course, has grocery orders from food retailers such as Sainsbury's, Waitrose, M&S, and Aldi. Well, joining us now, we're delighted, is the company's chief executive and co-founder, Will Shu. Will Shu, thank you so much for coming on Bloomberg this morning. When you look at the amount of deliveries that you're doing, I mean, it's pretty incredible. The pandemic has been really good to you and your company. What happens once the vaccine gets rolled out? How can you hang on to those precious customers?
Well, the first thing I'd say is this shift from offline to online has been happening for over a decade now. But the interesting thing about food is less than 1 out of 21 meals a week is actually transacted online. So we think we're still at the beginning of this offline to online transition. And so, our belief is that COVID has accelerated that trend, but the trend has always been moving in that direction.
So, Will, what does Deliveroo look like in 3-4 years? I know, we talk about these dark kitchens, which are basically Deliveroo managed. You have some of the grocers that you're also delivering, which was extremely useful in lockdown. And then you have the normal restaurants. How does that look like in 18 months from now? What percentage, where?
Well, I think you said it. I think when we started this business, we operated in a few London neighborhoods working with independent restaurants. We've then transitioned into working also with restaurant chains. We've also started working with grocers, as you said, and we're really thinking about the future of food. And so we're the world leader in delivery-only kitchens. We now offer a service where we deliver on behalf of the restaurant, even if you order through the restaurant's website or app. And so we're always thinking about these future innovations. And so 18 months from now, I think, a lot of these things you talked about will just become bigger and bigger parts of our business.
Are there markets that you want to exit, and what are the main markets where you want to get involved in or, invested in?
I think that there are so many opportunities in this space. I think the ones that, I'm super focused on are the fact that less than 1 out of those 21 meals a week are transacted online. So I think there's a lot of sort of green space ahead. And then also just increasing the geographic coverage in the markets we're in. And just those 2 things alone are tremendously exciting for us.
I mean, there's been a pretty big expansion of Just Eat takeaway. What does that mean for Deliveroo?
I think that, we're focused every single day on the best proposition for riders, restaurants, and consumers. And we welcome competition because at the end of the day, the 3 sides of the marketplace will get a better deal. And so we always, welcome competition. But at the end of the day, we're focused on what we're doing.
Is now a good time to IPO?
Is now a good time to IPO? I can tell you this, we fundamentally are just obsessed with the 3 sides of our marketplace and how can we build innovation for those 3 sides. I'm not a financial markets expert.
But if you IPO or if you float, then you get so much more cash that you can reinvest. I'm sure you have people looking at that. What kind of timeline would be, your ideal?
We're an ambitious company, and there are options available to us. But like I said, what I care about every single day is those 3 sides of the marketplace, and we'll see what the future brings.
Will Shu, what's the more difficult thing about the way you manage the business? So you have the drivers, you have to make sure that you have enough drivers at the right time, at the right place. You have to almost preempt what kind of trends consumers will do. It's a pretty complex operation. What are you, most focused on right now?
I think that's a great question. The key to Deliveroo's success is how do you balance the 3 sides of the marketplace, both in real time, over a medium time period, and over a long time period. And I think it comes down to obsessing and putting ourselves in the shoes of the 3 sides of the marketplace so we can build products for them that maybe they don't even think are important today. And ultimately, that's how we've gotten to where we are today. It's that obsession.
How much bigger do you think the delivery business will be in general, Will? So, you know, post-COVID, and I know you said you're expecting this business to grow, but is it double in size? Can it be even more than double?
Well, like I said, you know, less than 1 out of 21 meals in the world globally are transacted online today. And when you look at industries like travel or marketing, that number is like 50%. So I think we are just getting started, even though, you know, we've accomplished a lot in the last 8 years, but we are just getting started, and we're really, really excited about the future.
I know you don't want to really talk about an IPO, but are you up for sale? Are we going to see a lot more consolidation in this industry, in this space?
Like I said, you know, our focus is on the 3 sides of our marketplace, and ultimately that is what propelled us to where we are today. And we are a very ambitious company, and we will see what happens in the future.
Do you think the UK government has done enough to support startups in the UK?
I think that the UK government, I think this is a great place to start a business. You know, we've been here about 8 years, and, you know, we hope that that continues into the future as well.
Will Shu, thank you so much. Don't be a stranger, especially when you have news. Come back on Bloomberg, the chief executive of Deliveroo, joining us this morning. Now, coming up later today, we'll be speaking to the Russian central bank governor, Elvira Nabiullina. We'll talk, of course, about ruble. Maybe she'll talk about the vaccine. Certainly, the Russians were one of the first ones to roll their vaccine out. And, of course, we'll talk about emerging markets and dollar dynamics with the central bank governor of the Bank of Russia. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. Now, the chairman of Siemens says he welcomes competition from Asia. Jim Snabe told us he's trying to renew the 170-year-old company.
If you look over the last 20 years of dramatic change because of digital, the the big companies that really disrupted were the newcomers, the companies we didn't know before. You just look at the most valuable companies today, and probably 5 out of 10 we didn't know 10 years ago. And so the big challenge that I ask myself is, how can we get the old companies, the ones that have more than 100 years of experience, to become renewed, reinvented, so to say. And that's very much been the task we took on at Siemens, and now also at Maersk. Siemens is today 3 companies. So we have dismantled the conglomerate, which when I started in the board in 13, was in 10 different businesses. And now it's 3 companies, individual companies. Siemens Healthineers, going after the transformation of healthcare, which is really a move from, let's say, generic healthcare to individualized healthcare and prevention. You have Siemens Energy, which we spun up here here in September, which is the energy company that is managing the transition of energy systems from fossil to renewable energy. And then we have Siemens, which is the combination of hardware and software to disrupt manufacturing, urban living, and also mobility. And you can see how these 3 challenges are completely different. And therefore, we believe that having speed and focus is more important than being big. Because if you're just a conglomerate and there's not enough synergy between the 3, you may actually end up in a situation where you are too slow. You have scale, but no speed. With this approach, we have speed. And with that speed, we can drive the transformation of the industry rather than being a victim of that transformation.
Siemens is also one of the companies that has done pretty well in Asia. Do you worry about increased Asian and Chinese competition in this space?
No, I actually welcome the developments in Asia. To a large extent, it will become, I think, the biggest market in the world. Certainly from a population point of view, a huge consumer market. A lot of manufacturing has moved to Asia over the years. And so we all assume that this will continue as labor costs define where manufacturing is happening. We see a reversal of that trend right now, and that markets are becoming truly global. And Siemens has more than 116 years of experience in China, which is quite remarkable. Maersk is 96 years in China. But the dynamics there is changing from, let's say, being mass production oriented at low labor costs to be an innovator, which means for a global company like Siemens or Maersk that we can get access to global talents. And if you have talents in all parts of the world, obviously you have a better talent pool to choose from than if you are limited geographically. So for me, it's an opportunity, a great market, great talents, and speed of innovation will show who can win.
And you can watch the full interview with Jim Snabe on Leaders with Laqua. That's a little bit later on in 2020. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Uber has sold its self-driving car division to Aurora, taking a stake in the startup. Sources tell Bloomberg the deal values Aurora at $10 billion. Uber is scaling back the ambitious self-driving project, instead focusing on turning a quarterly profit next year. The deal values its unit at $4 billion, just above half of its valuation last year. Now, Airbnb is boosting the price range of its IPO, pushing its potential valuation to as much as $42 billion. Increasing the price usually indicates high demand from investors. Airbnb can still price its shares up to 20% higher without having to reapply to the SEC. And water is joining gold and oil among the commodities traded on Wall Street. Farmers and investors alike are now able to hedge against and bet on future water availability in California. The contracts from the CME are the first of their kind over in the US. They're highlighting concerns that water may become scarce across more of the world. And the UK has launched what it's calling the biggest immunisation campaign in its history. COVID vaccinations have started across the country, with frontline staff and people over 80 at the front of the queue. Tens of thousands are expected to get the vaccine from Pfizer and BioNTech in the coming days. The UK is the first Western nation to begin vaccinations. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, the markets focused firmly on the vaccine. The markets really focused firmly on Brexit. Now, we understand that Boris Johnson will travel to Brussels to see whether he can find a compromise with Ursula von der Leyen. But actually, he spoke at a hospital earlier today in Westminster. He spoke about COVID. He spoke about the vaccine. And it hasn't, he didn't seem very hopeful at all on an EU deal. I think his exact words were, he's hopeful of an EU deal, but it's very tricky. So the markets are looking at that. The markets are looking at, of course, what we had overall about some of these COVID deaths, matching April peaks as hospitalizations around the world are also jumping. Most stocks today dropping. Again, investors focusing on swelling coronavirus infections, but also tougher restrictions ahead. And then pound weakening for a third day as optimism for a Brexit talk leading to a deal continues to fade. So we'll see exactly what happens from the meeting of Boris Johnson with Ursula von der Leyen. Up next, more Bloomberg Surveillance. We speak with Peter Pratt.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
Brussels or bust. Boris Johnson travels to discuss a Brexit deal face-to-face with Ursula von der Leyen. The pound continues to weaken. The big rollout. The UK vaccinates its first citizens in what it calls the biggest immunization campaign in history. Stocks and U.S. futures dip on a report that Pfizer won't get more doses to America, though, until at least late June. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London, Tom Keene in New York. Tom, nice to have you back, just in time to look at Brexit and the fact that actually talks are not going so well. We heard from the Prime Minister Boris Johnson speaking at a hospital, actually the same hospital where he was treated for COVID back in April. He talked about the vaccines, and then he said he's hopeful on a EU deal on Brexit, but actually it's going to be very tricky. So actually he doesn't sound that hopeful at all, Tom.
Well, away from the markets, and really an extraordinary morning, folks. I really can't say enough about it. The huge news in the United States is Politico reporting that President-elect Biden will select a general from the Pentagon to be his defense secretary. We'll talk a little bit about that. But far more, Francine, is this vaccine in Coventry. I really can't convey enough the sea change that is this morning.
Yeah, Tom, I was actually just reading about the Pentagon appointment, and it could be a first, so we'll have to delve into that a lot deeper. Should we look at the markets, Tom?
Well, let's look at the markets right now. Equities, bonds, currencies, commodities. I'm going to call it a churn and a correlated churn. I really do want to point out one item with red on the screen, futures negative 13. The VIX barely backs up 21.74. It is the doldrums, except for inflation expectations are ever driving higher. This will be a huge theme today and over the next few days for surveillance. The real yield, which is the nominal yield minus inflation expectations, that equals the inflation-adjusted yield, and it is a stunning negative 0.9774. That negative 0.98%, Francine, bears careful watching.
Yeah, so Britain kicks off its vaccination drive, and Boris Johnson is heading to Brussels. So the other thing I would carefully watch, Tom, is the pound weakening for a third day as optimism for a breakthrough in Brexit talks continues to fade. The UK Prime Minister is planning to head to Brussels after deadlock within days for these urgent discussions with von der Leyen. I don't know if anything will come out of it, but certainly something that we need to keep an eye on. Then I want to show you gold because we did see a bit of support for that 1,865, Tom.
Very good. It is an important day, to say the least. If you look at the work of Louis Pasteur from over 100 years ago, the cure of the child killer diphtheria of the early 20th century, obviously polio, moving forward into my childhood, there are moments where you stand still. One of those moments was this morning before the Prime Minister of the United Kingdom, the grandmother from Coventry.
Just so strange and so wonderful, really. I'm looking forward to Christmas. I didn't think I'd be getting home so soon from hospital, so I'm spending Christmas with the small four of my family members, and then we'll see what happens in the new year. But I'm just looking forward to Christmas. Yes, I am.
It's amazing to see the vaccine coming out. It's amazing to see this tremendous shot in the arm for the entire nation, but we can't afford to relax now.
An amazing set of events with the leadership of the United Kingdom. Dr. Fazeli joins us now. Sam Fazeli, of course, leading all of our pharmaceutical coverage at Bloomberg Intelligence. Sam, for Big Pharma, this is a huge victory. I know we're all surprised by this, but for you as an informed individual, what is the greatest surprise of the success of Big Pharma?
I mean, the greatest surprise, Tom, and good morning to you on this hopeful day, is that they managed to do this so fast. I think the last time anybody developed a vaccine this fast was 220 years ago when Edward Jenner developed the first smallpox jab. Of course, he tested it on his son. Here we tested it on Margaret. Well, of course, it's been through proper clinical trials. So, that is the thing that I am most excited by. That how fast we've been able to cut the red tape and get this product through the clinical trial process. Of course, the research that went into it took years.
What have you learned about the cold that is required to deliver this therapy? What have you learned in the last number of days about liquid nitrogen and the ability to get down there where centigrade is low or even Kelvin is mentioned?
Yes, so I mean those are continuing issues. We know how Pfizer has managed to deal with it out in the U.S. And I think in the first wave of getting these things done, when you listen to CVS, who's actively involved in doing this in the U.S. The first wave will be relatively achievable because there are centers hospitals where they have these kind of facilities, and then, of course, care homes where the vaccine is being delivered to them. So that's easy. The next level is the tougher one. When you go into, in the next 6 to 12 months will be interesting to watch.
Sam, is there a danger that actually this, the COVID-19 is mutating, and have we really figured out the origins of where it came from?
The origins still continue to be, as far as I haven't looked, to be honest with you, recently, but they continue to be where it came from, which is a zoonotic infection, which came from animals, of which there are many that can still come to us, unfortunately. So the mutations are what I'm going to be focused on is going forward as we more and more we put this virus under pressure with our therapeutics and our vaccines. That's in the next 12 months that I'm going to be watching if anything evolves in terms of getting around our immunity.
Sam, we've seen a number of reports up to 2/3 in certain countries, 2/3 of the population don't want the vaccine. Can they change their mind? Does that seem very high?
2/3 sounds a lot higher than I have come across, but I suspect you'll get lots of regional variations. I'm pretty sure that in Boston and places like that, you'll be at cosmopolitan areas, you'll be at 90% acceptance, and in rural areas, at much lower acceptance. Probably because of partly the logistics of having to deal with it. So the issue is going to be, what's the equation that we're going to have to solve here, Francine? How many people already have immunity through natural infection? And how many people do we need to vaccinate to get us to the level of herd immunity? We can deal with a lot of our pressure on hospitals and deaths, etc., by just getting that group of susceptible people done first, and then try and worry about how to broaden out to herd immunity.
Great. Thank you so much, Sam Fazeli, there for all of the insight, of course, on COVID-19. It was quite emotional for a lot of people to see that first grandmother actually being vaccinated in the UK. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Thanks, Francine. British Prime Minister Boris Johnson will travel to Brussels to try to rescue the Brexit trade deal. Johnson will meet with European Commission President Ursula von der Leyen. There are growing fears on both sides that negotiations may fail. Johnson and von der Leyen spoke last night, and both agreed a deal remains far off. On Capitol Hill, talks over a $908 billion pandemic relief plan have slowed down. Negotiators are trying to resolve differences over state and local aid and liability protection for businesses. Lawmakers also are haggling over a giant bill to fund the government into 2021. The relief measure would be attached to that. And Joe Biden will be one formal step closer to the presidency today. It's the deadline for states to certify their slates of electors to the Electoral College. That is, they'll lock in the names of the people who will formally vote to make Biden the president. All the states where President Trump is contesting the results have already certified their returns. And he was a World War II fighter ace who became the first person to break the speed of sound. Later, a new generation learned of the exploits of Chuck Yeager through the book and the movie The Right Stuff. Yeager died last night. He was considered the finest test pilot ever and trained many of the men who were pioneers in space exploration. But he never had an interest in becoming an astronaut himself. Chuck Yeager was 97 years old. Global News, 24 hours a day on air, and a Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Ritika, you absolutely nailed this. This guy was a hero in my house, and it's very emotional for the family. But I want to say one thing very much about General Yeager. He was a war hero before he was a test pilot. This is Bloomberg. Stay with us.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, to talk about the markets, we're delighted to be joined by Rick Lakai. He's State Street Global Advisors Global Chief Investment Officer. Rick, there's a lot to talk about with the rotation in place, some of the record highs that we saw in equity stocks. And then I point to a great piece by Arjan Authors that basically says, if you look at some of the signs, especially from Asia, we're in a classic cyclical recovery story. Is that true?
It is true. If you look at the PMI last week in China, it's supporting the idea that those economies have really recovered pretty rapidly. It's a cyclical recovery. But at the same time, you look around Europe and we're a little bit more marooned, and you've got case counts going up very strongly in the US. So it's by no means a one-story picture.
Where do you see the best value? Where do you find opportunities right now?
Well, in equities and credit. So we're overweight, we're risk on, we're going in with our eyes open. We know that we'll be tested again next year in terms of, news flow on COVID and elsewhere. We like quality and growth when it comes to equity picking. They'll continue to do well. And that puts us into US and China particularly. So we're overweight US and we're overweight to some extent emerging markets in Europe. But China's a real focus because of the composition of its stock market. Is becoming more consumer orientated, and the tech and health is not all entangled in this US-China dispute.
Rick, Tom Keene in New York. Good morning to you. As you know, the Dow Jones Industrial Average is Boeing influenced, up single digit, but we've got solid double-digit performance in SPX and a stunning 40% return in NASDAQ 100. How far behind is institutional global Wall Street? Has it been a year where they just simply haven't performed, or have they enjoyed some of these gains?
I think they've enjoyed some of the gains, but like us, people have been pretty cautious in an environment where the stock market's doing much better than the underlying earnings story. You've got to have some very strong confidence that you'll get an actual recovery and economic and earnings growth into next year. We do have that confidence, but we're tempered by the knowledge that, fiscal stimulus isn't there yet. And you've got a complete lack of coordination at the moment between the approaches that different countries are taking. Nevertheless, we think that's the only place to be at the moment, to be in equities, and we've gained from those. And we think some other investors have too.
Is the framework here forward a single-digit return? You and I have aged with people telling us a single-digit return is the expectation, and instead, not for all the market, the Wilshire or broader index Russell, but there's so many double-digit returns out there. Are you waking up for a double-digit return, or are you back to an actuarial assumption?
Well, we're back to single digits, but single digits compounded can give you a lot of wealth, particularly if you've got inflation at low levels and alternative assets aren't delivering very much. But in a given year, for sure, you can have double digits. And very often that's because you're bringing forward returns from the future when discount rates have dropped. So when real yields are very low, you can get extraordinary positive returns. But we just need to think about long-term growth and how that is not going to be maybe as it was in the 60s, 70s, 80s. And that's going to lead to somewhat lower returns in the long run.
Rick, are earnings assumptions based on recovery that could be much sluggish than we think?
Well, there's enormous operational gearing, isn't there? When you come from a point where you've let go a lot of labor, you've had very weak demand for your products, even some growth translates very quickly into earnings. And so you'll see a wide range of outcomes across emerging markets in the US. But on balance, we think they're right. The consensus is right. It could be even too pessimistic in terms of moving into 2022, because we think that operational gearing that firms have won't necessarily be a good story for employment growth, but it'll be a very good story for earnings growth.
I have a great Ionia chart, Rick, which I'll show in a second, but it's very clear that the market is positioned for the ECB to go big tomorrow. What happens if they disappoint?
Well, I guess you don't need to tell me that they probably won't disappoint. They're very aware of market expectations. But if they do, yes, you'll see a setback in Europe. But I think the bigger issue is not so much the monetary stance of ECB, that is important, it's the fiscal side. And I think we don't have an adequate fiscal response yet in Europe. It looked like we were going to get a pan-European deal. It's not really big enough. And even now, you're seeing a bit of backsliding at the national level, whereas what we need is actually more. And I think investors are going to pay more attention to fiscal than they are to monetary at the moment.
Rick Lacaille, thank you so much, and we hope that you can continue with us. He is with State Street Global Advisors. Coming up, your futures -14, Dow futures at -83. From Goldman Sachs, Peter Oppenheimer. This is Bloomberg. Good morning.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need is surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
When you call somebody, any head of state in the world, how hard is it for you to get anybody on the phone? I assume not too hard.
I would say it's not too hard, but sometimes it takes a week.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Bloomberg Surveillance. Good morning, everyone. Francine Lacroix in London. I'm Tom Keene in New York. Futures, it's the doldrums. We're making it up as we go. I do want to point out one important issue, excuse me, which is the real yield staggers to new low levels. We're not at the record lows, but negative 0.98% is, a big deal as well.
A big deal.
It's a big deal. Richard Lacaille with us right now, State Street Global Advisors. Rick Lacaille, you're going to take on new duties for State Street in March, really focusing in on ESG. It sounds like a wonderful challenge for you. There's so many people that say, okay, it's great, it's a fad. Do you see a proven track record that you can create alpha with E, with S, and with G?
Absolutely, and I think I'm very excited about the new role. Firstly, it's fantastic. And I've got a great successor in Laurie Heinel, who's going to be a terrific global CIO. What I've seen over the last few years and what academics have shown is there's a market inefficiency in ESG. Investors have still got a blind spot. It won't last forever, but at the moment, I think there's an alpha potential there. And we certainly want to exploit that at SSG. But in my new role, I want to help our clients, the asset managers and asset owners of State Street, also exploit those opportunities. So I think there's a world of change and opportunity around ESG that's really pretty significant. And it's not a political issue, although I think for some it's politicized. It's a real investment issue.
You explain it nicely. Is the alpha generation now a timeline because nobody's on board, and once they get on board, the alpha disappears? Or is there an interior alpha ability there that we don't see?
I think it changes over time. So I think in the next 5 years, I think the market will get more efficient in relation to the things we're currently looking at. But life moves on. You look at other things that are becoming more significant. And in a world where intangible value is such a large part of people's wealth in terms of capitalization of market, then I think there's always something new because reputational human capital issues can be very significant in damaging value or creating value. And I think as our knowledge improves, there'll be kind of new areas, if you like, new information that's underexploited.
What is this? I mean, Rick, we spoke to you for 15 minutes and we haven't asked about Brexit. Are UK assets attractive if we get a last-minute deal?
Sterling's still a little bit cheap. If you get a deal, I think there'd definitely be a rally in sterling. I think assets themselves have other challenges. I think, frankly, the UK, the mix in terms of the index is quite pro-cyclical. So if you had an enormous coordinated fiscal stimulus, then I think the UK could do very well. But it's got, in some respects, the wrong mix for this kind of growth and quality environment where technology is very much in favor. So that's an unfortunate place to be in as you're sort of grappling with a new partnership with Europe.
So, Rick, what do you mean the wrong mix? Is there something that they can do in terms of tax cuts to become more attractive? We used to talk about the UK become a bit more like Singapore on Thames. Would that make sense for the composition of this economy?
I think that would be a controversial way of putting it, but I think there is a fulsome effort between the banking industry, the asset management industry, the regulators, the Treasury, the Bank of England to say, what can we do to harness capital more effectively to get better long-term growth? And part of that is looking at patient capital, the way we can get capital involved. We can create things like the Investment Association's long-term asset fund that will be more effective than some of the open-ended vehicles we've got, where you have to manage the money as if you might have to provide liquidity tomorrow. I think that's held back some of the long-term investing that the UK really needs.
Rick Kai, what do you do with oil? Is oil going to climb on board ESG? Is oil going to adapt or adjust? Or do you have to go with a decade-long underweight?
We're going to be using oil for some time. I mean, it may not be a great news item in some ways. We're fading out coal more rapidly, but oil might be around for a variety of reasons for a while. But the oil majors have really taken very different views. Some have diversified their energy mix. Some, like Exxon, have said, look, we don't necessarily understand renewables. We're not going to double down on renewables, but we are going to manage our footprint as best we can. I think we need to navigate as investors what's the best long-term strategy for those and how do we engage with those companies to get, to avoid the kind of cliff edge that you see with stranded assets. And I think we're getting better at engaging with those companies.
Is peak oil sooner than we think?
I wouldn't like to put a timeline on it, but all you need to know in a way, it is going to happen. Therefore, how much capex do you want to commit to relatively expensive long horizon oil? Not so much, particularly where you've got very low cost producers like Aramco will be around for a long, long time.
Rick Mackay, thank you so much. Greatly, greatly appreciate it this morning. With State Street Global Advisors, their Chief Investment Officer. It is always an interesting conversation with Mr. Walsh of Boston. Martin Walsh on the battle over the pandemic. Look for that here in the about 7:30, I think we'll do that. In bonds, we've got steeper yield curve, yields churning here. The real yield comes in negative 0.9789 on the real yield. Again, dollar churning as well. I would make note, euro 121.21. Please stay with us. This is Bloomberg. Good morning.
Retirement is confusing. That's one reason why 42% of people age 18 to 29 have no savings, and partially because of things like student loans and other priorities like just being able to pay rent. But if you do have the means to save it all, here are some ways to get started. First, there's the one everyone thinks about, which is your 401k. This is a savings account that lowers your taxable income because you don't have to pay taxes on the money you contribute. The downside is that when you take that money out, you have to pay taxes based on the income bracket you're in at retirement age. But there's one major benefit to your 401k. Employers often offer contribution matching, which means essentially you're getting free money. Another option is the Roth IRA. With this, you pay taxes now on the money you put in. This gives you a savings account you can withdraw money from at retirement without having to pay taxes on the money you take out. You can only put $6,000 a year into a Roth. This is also a great option because with a traditional 401k, you may have to pay a penalty if you have to cash that money out early, but that's not the case with a Roth. Most financial experts suggest a combination of the two if you're able. To save more and worry less, you can set up automatic transfers into a savings account from your regular bank or credit union. Tools like Betterment can also help you set up automatic payments into a Roth IRA so that investing can be simple and mindless.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. I'm Ritika Gupta with your Bloomberg First Word News. A 90-year-old woman was the first in line today when the UK became the first country in the West to offer coronavirus vaccinations. The National Health Service calls it its biggest immunization campaign ever. Prime Minister Boris Johnson warns that mass vaccinations will take time. The US is now averaging about as many deaths from coronavirus as it did during the April peak. The 7-day average of reported fatalities went over 2,200 on Sunday. It's likely that reported fatalities will increase further. That's due to the lags between infections, deaths, and when the deaths are disclosed. And for the first time ever, an African-American will be nominated to run the Pentagon. Bloomberg has learned that President-elect Biden will name retired Army General Lloyd Austin as Defense Secretary. Austin was the first black general to command U.S. troops in the Middle East. Meanwhile, Joe Biden's pick for National Security Advisor sees a chance to restore the nuclear accord with Iran. Jake Sullivan said any progress towards preserving or enhancing the deal would depend on international cooperation. Sullivan told the Wall Street Journal CEO Summit that the situation is dangerous because Iran now has more enriched uranium. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine Tom.
Where to go? Thank you so much. Now, Brexit talks remaining deadlocked as policy leaders head to Brussels in an attempt to salvage negotiations. Now, the UK Prime Minister Boris Johnson saying he's very hopeful ahead of urgent talks with European Commission President Ursula von der Leyen, but he also said they are very tricky. Now, Philippe Lamberts on the Brexit Steering Committee and member of the European Parliament also spoke to our Maria Tadeo. He took a different tone, expecting no deal to take place.
Less than even. So my money is now on having no deal. I know that it was a prime minister who wanted to make a last-ditch attempt, but then again, that was already the scenario on Saturday. So the negotiators were given 48 hours more, and the result after 48 hours is that nothing moved an inch.
Well, for more on Brexit, let's bring in Bloomberg's Brexit editor, Ed Evans, who's been working nonstop for the last 3.5 years, if not more. Ed, when you look at, we're definitely on tenterhooks. We're once again down to the wire. Once again, the Prime Minister is trying to salvage these talks by going to Brussels. When's the deadline from when this actually needs to be dealt with? Is it the next couple of days, or could we go into next week?
I think it's very dangerous to start talking about deadlines of Brexit. They have a habit of being remarkably elastic. The one deadline that is fixed in all this is December 31st. That's the end of the Brexit transition period, and that is highly unlikely to change. What I think people were expecting was that the European Parliament and the British Parliament would take a number of weeks to ratify any deal, and now that's the bit of the process that's being squeezed. I think this week, Boris Johnson is expected to go to Brussels in the next couple of days. We've got a summit of EU leaders that begins on Thursday, and they are very keen to keep Brexit out of those negotiations. They've got other things to talk about, Poland, Hungary, and the rest of it, which really suggests that Wednesday is looking like the day that there is a decision day one way or the other.
And what's Boris Johnson's political calculation? Does he, need a deal because economically things aren't going great because of COVID-19, or can he not afford to lose more the right wing of his party? So is it likely that we get a no deal?
He is operating under certain constraints. He's got a majority, but it's a majority built on people who all signed up to Brexit, and that could make compromising difficult. It's not inconceivable that if he were to compromise, he could face a rebellion from his own MPs. That said, obviously we've seen today the news of the vaccinations now being rolled out. That at least begins to put the coronavirus behind him. Does that give him more space potentially to walk away without a deal? It's very unclear what he will do, and he may not be clear in his own mind to speculate for a moment.
Edward Evans, I want to revisit what Francine was alluding to, which is, should the Prime Minister be talking to Brussels or be talking to key nations? I mean, I'm fascinated by the federalism of this on the continent of Europe. Who exactly should he be talking to get a best outcome for his United Kingdom?
Well, that depends on who you ask. I think the British position has been throughout this process. The hope has been, okay, talk to Angela Merkel, talk to Emmanuel Macron, and settle a deal between the big three. And they've been remarkably united throughout this process, pushing back from that and saying, no, the UK must go through Michel Barnier and the EU's negotiating team. And actually, we've got a story out this morning where it's quite clear they're resisting changes to Barnier's mandate, and they want the UK to go through that. So the next day or two is going to be very interesting to see whether Johnson does finally get to Merkel and Macron, and whether they actually listen to him and do that deal. That's really what this is now boiling down to.
What will be the Chancellor of Germany's response?
I think she's been very consistent throughout this process in calling for compromise from both sides. Not just Britain, but from France too. We know the three key issues that both sides are still at loggerheads on and really made no progress. That's fishing, the level playing field, and the governance of any treaty. And to get a deal would require compromises on both sides. Whether they're prepared to do that is another matter.
Ed, so we know the Prime Minister, Boris Johnson, and the Commission President, Ursula von der Leyen, spoke by phone yesterday and didn't manage to get a breakthrough. What does going there in person actually change, apart from showing at home that you're trying your best?
No, what we've got to is the point where both sides now recognise that the negotiating process has really gone as far as it can do. We're now dealing with fundamental differences between the two sides rather than things that can be negotiated away through technical discussions. To get a deal, political leaders now have to step in and broker a compromise, and this meeting is a recognition of that. Also, it does suggest that they still think they've both got a little bit more time before the ultimate deadline and want to use it to get some more concessions from each other. So that's where we're at in this process.
All right, thanks so much. Our Ed Evans there, of course, who oversees all of our Brexit coverage. Now, up next, we talk about the European Central Bank. Maybe we'll touch on Brexit as well. We're delighted to be joined by Peter Praet, the former ECB chief economist. That's coming up next, and this is Bloomberg.
mkokoteni ya stima nikaipata naweza sikia vizuri sana kwa sababu inatumia nguvu sana.
The advantage of the electric handcut over the manual conventional handcut is that one, it increases the productivity level of the users. Two, it is eco-friendly in that it does not pollute the environment. Three, it increases the income level for their users in terms of loading capacity and also in terms of productivity.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Tom, there's that little thing called the ECB deciding on interest rates. QE, more is expected on PEP and TLTROs later this week. And we're delighted now to be joined by Peter Praet to put all of this in context, not only talk about inflation, about growth, but of course what the ECB's next move is, especially when it comes to higher euro. Peter Praet, ECB former chief economist, now joins us. Peter, thank you, as always, for making us a little bit smarter on the thinking that we should be following through looking at the European Central Bank. If you were in charge, what would you do this coming week?
I think it's important to say that the decision to recalibrate the measures has already been taken in October, actually, at the last Governing Council meeting. So what we discussed today is the question of calibration. And the calibration will depend on the staff projections, and the agreement about of the Governing Council on the staff projection. For the first time, you will have 2023 in the projections. I think that's important to as a sort of signal, how the ECB sees a little bit the longer-term prospects. The short term has not been very good, with the second wave. So the recalibration will be basically looking at preserving the very easy financial conditions that you have today in a context of a strong issuance of public debt. As you know, the ECB has been buying, most of the net issuance of public debt recently since the COVID crisis. And I think that will continue, in a longer period of time, probably for an additional 6 to 9 months. That's the purchase program of the ECB. The other point on which the ECB is going to insist very much is the bank lending channel, what we call the bank lending channel. You know that there is a scheme of funding for lending, very generous one. And this COVID shock is basically an SME shock. I think the biggest enterprises have been usually lesser hit by the COVID shock than the SMEs in general. And the SMEs depend very much on bank lending. And as you know, the situation of European banks remains relatively weak in terms of profitability. So there the ECB really wants to continue the action for funding for lending. So I would basically do the same as today. What interests me more in the communication of Thursday is the wording, the guidance, the longer term guidance on policy, because the ECB has used very strong words recently, like preserving, very easy financial conditions in all jurisdictions. That's quite strong as a statement. Also, avoiding any possible crowding out, resulting from massive, issuance
Peter,
of public debt. These are strong words, actually.
There are strong words, and there was a survey of economists, and actually Caroline Locke, who lives and follows the ECB in Frankfurt, wrote a wonderful piece saying, according to economists, the ECB has now de facto become a yield curve controller. Has it?
I think it's exaggerated. I think they want to preserve financial conditions, but yield curve control, explicit one, goes much further. It is an explicit commitment, to keep the rates more or less as they are. Here it's conditional on, the economic situation. So it is not a sort of blanket, guarantee that you would give with a yield curve control. So it's very conditional on the event. So, but it is true for the time being, they want to preserve the present financial conditions that you have today. So that means implicitly they are satisfied with the yield curve as it is today and try to preserve that. That's why many economists say, well, it looks like yield curve control. But I would say that yield curve controls goes one step further, because you give an additional guarantee and do whatever it takes, to keep the curve as it is. No, I would say it's very conditional. I mean, think about the vaccine, for example. In 6 months from now, you may have a very different sort of environment. So the ECB wants to preserve this flexibility.
Right. Peter, I look at the reflation that's out there, and clearly there's evidence of reflation in the United States 5 years, and even to an extent some stability in reflation in Europe as well. What is the risk that reflation turns into stagflation?
I think the risk of inflation is relatively low, certainly for the next 2 years, I think. But I think the markets are right somehow to think about alternative scenarios. I don't think these are the main scenarios, but you always have to be ready for the unknown, for the unexpected. I think what could happen next year in 2021 is when things start to go much better, there's a lot of repressed demands, from the consumer side, from the business side, and you may have at some point, this demand, putting some pressure on some prices. I would call them temporary price pressures, but the markets may react, very strongly. And then it will be very interesting to observe what would be the reaction of the central bank if you have these sort of, I would call them temporary price pressures, sometimes, perhaps in the fall of next year.
Okay, well, price can be expressed in strong euro. Is Christine Lagarde going to have to deal with 126 or 128 euro?
Well, I think it's important to say that the US, because it's a relative price, the US is in this sort of flux, situation, very moving situation. So I would say, as I said before, it's a two-way risk, when you look at currencies. And I think, we have to see also what happens in the US. Now, part of the appreciation of the euro that you see today, and I would probably argue that this is the biggest part of the appreciation of the euro, reflects better fundamentals compared to the United States. And basically the fact that, you have more, risk-on sort of attitude. So the flight to the dollar has been reduced globally. I think the Europe can live with that. Of course, the ECB is going to repeat, the verbal, messages, that, it's important to follow the currency. I don't think there is much you can do about this.
Right.
I think ECB has to follow its policy.
Well, let's do this. Let's come back. Dr. Pratt with us with the ECB and their former chief economist. We're thrilled he's with us, and much, much more to talk about here about Europe and, frankly, the global outlook into 2021. That'll be a theme with Edward Hyman. He is at Evercore ISI. I love saying this. Formerly with C.J. Lawrence. Ed Hyman, the 1 o'clock hour. Futures, Ed's looking at this going, what's he saying C.J. Lawrence for? It was venerable. You read Ed Hyman at C.J. Lawrence. Futures, negative 13. This is Bloomberg. Stay with us.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
This is Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg Business Flash. Uber is pulling back from its vision of a fleet of self-driving taxis. The company is selling its autonomous car division to Aurora Innovation. Plus, it's taking a stake in the startup. Uber is scaling back on ambitious side projects while it focuses on turning a quarterly profit. The pressure on money managers is ramping up. The industry's record low fees are set to be squeezed even further next year. More than half of asset managers plan to reduce charges. That's according to a survey from Brown Brothers Harriman. More than a third of the money managers say they'll explore starting new passive or exchange-traded funds, which are cheaper. And there's one more sign that Elon Musk may be relocating to Texas. The billionaire has now moved his private foundation from California to the state's capital, Austin. That's the same place where Musk's Tesla electric car company is building a truck and SUV factory. And that is your latest Bloomberg Business Flash. Francine.
Thank you so much, Ritika. We're back with Peter Praet. He's a former ECB chief economist. And Peter, we're talking a little bit about what the ECB should or shouldn't do this week, and we also touched on euro level. Is there a level that could be problematic for the European Central Bank, and what can they do about it? Is it actually a level, or is it the pace of change?
I think the most important is the pace of change, of course. And I would argue that the level that we see today is reflects largely, the evolution of the fundamentals, I would say. And the pace of appreciation has been, I think, relatively moderate. I would argue for that. So I personally was never much in favor of talking, about the currencies and avoiding this and trying to do what is necessary for your conditions, your economic and financial conditions in the union, and not so much arguing on the currency. It is true that the momentum of the currency moves is quite an important variable, but I would say today this is in, I would say, relatively reasonable range. We will have to see what happens in the US, so I would also argue that we should not, talk too much about the currency for the time being, because the policy also in the US is quite uncertain. We're going to see what happens in fiscal, how markets will react to that. So I would basically keep calm on the currency issue. But it's a variable that you have to monitor, of course. But I would argue that today this is more or less okay.
Peter, does QE still work? At what point, we've had QE for such a long time. What exactly is the effect of QE? Does too much QE, distort and do more harm than it actually does good?
I think QE has been quite important, but basically today, if you want to support demand, aggregate demand, you need fiscal. And I think in the comments that you mentioned in general from analysts, the fiscal stance will be key. And basically what the ECB is doing now is basically, trying to keep financial conditions broadly stable, very accommodative as they are today, but in a context where you have extremely strong issuance of public debt in general. So basically, the ECB absorbs, a big part of the issuance of public debt, trying to stabilize basically, financial conditions as they are. I don't think it makes a lot of sense to do more in terms of monetary stimulus, but to keep financial conditions accommodative as they are today. For that, you may need to spend another 500 billion in the next 6 months, So that's a possibility, of course. But I think basically monetary policy works pretty well, but it works pretty well in the context of fiscal policy, not alone, but in the context of fiscal expansion. The question on the future will be a difficult question.
Peter Pratt, one of my heroes was Mark Blaug. I had any number of conversations with Professor Blaug, one of the giants of economic thought. He talked about the history of ideas. Do we have an idea in our economics for 2021? Or are we just making it up as we go?
Well, depends. Personally, what I think for 21, I think there are two questions, basically. First question is to see how much damage, did to productivity, did the COVID shock lead to? Because you can also argue that there is some acceleration of digitalization, for example, which is positive for productivity. I take basically that view that the impact on productivity may be not bad. That's the minimum. And because this shock has basically hit SMEs, and if I may say, with all respect, but the SMEs, which are not the most productive part of the society, they are very important for leisure, of course, but if you talk about restaurants, they are not the ones contributing to productivity in a country. They contribute to welfare, but not to productivity growth. So I think the productive sector of the economy has been very much sheltered in this shock. And I think some of the aspect of productivity, like digitalization, has been accelerated very much in this crisis. So I take a more optimistic view once we get out of this crisis about, the state, of the productive capacity. No, it will be a difficult way, a bumpy way, that I'm sure.
Peter, what will you look for from the ECB? One final question. What will you look for in the ECB in the next two meetings?
Well, I think in the next two meetings in 21, I think what will be important is to advance the strategic review. As you know, the ECB is going into this exercise, strategic review, a little bit like the Fed did. I think, the timing has to be, for some of the aspects of the strategic review, have to be brought forward. I think in the summer, it will be very important to clarify what is your target, what is your objective. You remember it's below but close to 2%. I think this has absolutely to be clarified, and I think it can be done. The other thing, I think, is try to reunite the different QE programs into one program. That will be for later this year. I think these are the two challenges for next year.
Dr. Pratt, thank you so much. Really informative. Greatly appreciate it. The former chief economist with the ECB, Peter Pratt. In our next hour, much more on the markets. On foreign exchange, Asia DXY just solid and pegged up at new strength versus the dollar. Daniel Katsev, The View from BNP Paribas. Right now, futures negative 12, Dow futures negative 73 on the dollar. A little bit of strength here over the last number of days. Really in the doldrums, though. Again, euro locked in 121.20, yen 104.07. Stay with us. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
This morning, quote, "If I can have it at 90, then you can have it too." A brave grandmother from Coventry, England, she receives the first vaccination. Those 80 and over get in line. Millions will follow. Most Americans will be vaccinated by, quote, next summer. It is the December doldrums. Markets, well, they go nowhere except the real yield, the inflation. Adjusted yield, again, ever more negative. And, well, he is not a civilian. He is rather a battlefield commander. Biden picks General Austin to command the Pentagon. Good morning, everyone. This is Bloomberg Surveillance. I'm Tom Keene in New York, Francine Lacroix in London. Much to talk about in America as well. The Prime Minister celebrating this vaccination moment. Francine, I've heard in all the reporting today that the first vaccination is so important and so emotional, it's pushed aside the Brexit talk. Is that possible?
Well, maybe for a couple of hours, Tom. It certainly was quite emotional when we heard earlier this morning, London time, the 90-year-old grandmother who is the first person in the Western world to receive a vaccine. It was right here in the UK. And then an hour later, the Prime Minister actually going to the hospital where he was treated for COVID back in April. And he talked about the vaccine. He talked about how important the rollout is, how this was a good news for the world and the UK. But then quickly after that, he had to shift to Brexit and saying, look, negotiations are very tricky. He's hopeful that something can be done, but certainly we weren't expecting to be here this Tuesday morning. This deal is really razor thin. It's hanging by a thread, and it could unravel at any moment.
Brexit talk into December, somehow I would suggest into 2021. With your briefing, our first word news in New York City is Ritika Gupta.
Morning, Tom, Francine. It will be the biggest immunisation campaign in the history of the British National Health Service, and one the world is watching. A 90-year-old woman became the first person in the Western world to receive a coronavirus vaccine shot today. People over 80 were first in line for the vaccine from Pfizer and BioNTech. British Prime Minister Boris Johnson will travel to Brussels to try to rescue the Brexit trade deal. Johnson will meet with European Commission President Ursula von der Leyen. There are growing fears on both sides that negotiations may fail. Johnson and von der Leyen spoke last night, and both agreed a deal remains far off. On Capitol Hill, talks over a $908 billion pandemic relief plan have slowed down. Negotiators are trying to resolve differences over state and local aid and liability protection for businesses.